This week is going to be an active one as the macroeconomic calendar is full of important news releases, including US inflation data. Notably, policymakers use this gauge to determine what to do next with their key benchmark interest rate. Markets expect the US Fed Reserve to start cutting rates in September. Inflation figures are due out on Wednesday. In the meantime, traders are digesting data on consumer prices in China, the world's second largest economy after the United States. Well, China's consumer prices edged up 0.3% in April from a year ago. This was the third consecutive month of a solid growth, which somewhat eased anxiety in the financial markets, reassuring investors that the Chinese economy could still recover in the near future. Traders are ready to take risks, which is weighing on the dollar. Demand for the safe haven asset is muted. And the US dollar index, which measures the greenback strength against the basket of six major world currencies, is trading flat in the range of 105.20 to 105.40. Friday's macroeconomic calendar was nearly empty but was offset by speeches from officials at both the US Fed Reserve and the European Central Bank. However, their statements lacked any new insights and led market stagnation. Today, we anticipate a similar scenario. Unlike last Friday, there are no macroeconomic reports on secondary importance scheduled for release today. In addition, only a few Fed representatives are set to speak on a Monday. Moreover, none of these representatives are key figures from the US regulator. In other words, today's trading day is bereft of any major news releases that could have a strong impact on the market sentiment. Thus, financial markets will most likely continue to stagnate. The euro-dollar pair continues to hover near the peak of its correction cycle with the 1.08 level acting as resistance. Compared to last week's price dynamics, the market is currently range-bound. This stagnation may serve as a phase for traders to gather strength, potentially leading to a new wave of speculative activity. To extend gains as part of a correction, the price needs to consolidate above the 1.08 mark. If the price falls back below 1.7, a downtrend will resume. Once again, we remind you that oil and the US dollar have an inverse correlation. Although the greenback dropped at the end of the previous week and oil was also losing value despite all the rules. However, the decline in oil prices could be explained by the ongoing rise in oil and other fuel reserves in the United States. Stable oil output is also contributing to lower oil prices. In fact, prices may slide to $80 per barrel. In the event of this, the market will be waiting for the reaction from Russia and Saudi Arabia. It's quite possible that the market will see verbal interventions aiming at a price stabilization. How is trading is going to unfold in the short term, we will definitely tell you in our next video reviews. Don't miss them and stay up to date with the latest market news. So see you soon.